And we've got the Exxaro Chief Executive Mxolisi Mgojo in the studio with us now this evening. Now, it's been a comeback story for you, Mxolisi. Tell us about it. How much is the coal price? And just looking at one of the measures is your revenue. You've gone up from 18 billion to 28 billion rand. I mean, that's a big move when you're talking billions of rand. So what's behind this, these moving numbers?
Well, suffice to say, David, the coal price did help quite a lot, if I may say. But even before then, you know, we have been embarking on a strategy of driving costs, driving output, and also really looking at how we define market excellence, being able to create a multiple of products, creating different type of blends, being able to actually put those products into various markets, both domestically and internationally. And what also has helped us is the fact that our acquisition of our coal, the total coal assets in 2015 also gave us a remarkable turnaround story. And a lot of that had to do with the activities that we said we were going to do at that particular point in time, in understanding the ore asset and also putting in through a very rigorous cost improvement exercise there and driving operational excellence, not only in our coal assets, but also focusing quite extensively on ECC. And that was a remarkable turnaround story for us, because at half year we reported that we had the net operating profit for that was about 110 million rands. We ended up with 455 by the end of the year. So a lot of that initiatives. We also streamlined our head office, whereby an Exxaro improvement program has resulted in about 230 million rand of sustainable results in terms of cost improvement, which in 2018 will go to as high as 300 million. Sure. So there's been a whole host of activities across all fronts which have come together based on the strategy that we embarked on quite a number of years ago and continue to drive aggressively going into the future.
Grant?
I mean, it's been a year of two halves for most commodity players. And last year, this time, we saw the likes of Anglo American announcing big asset disposals. Are there still opportunities in that space to acquire good quality assets, or is now a time to rather shore up the balance sheets?
You know, we are in a very, very fortunate position, Grant, in the sense that we've got a huge coal project pipeline that we have been working on and are developing. And in the next coming 5 years, we'll be spending as much as around 17 billion in terms of unlocking some of the Waterberg assets, the Tabametsis, the GG6 Phase 2, because these are all talking to replacing some of our Mpumalanga mines that have come to the end of their life, being the Inyanda coal, and we are seeing the also NCC that came to an end. So we also going to be embarking on a big project in the Belfast project, which is going to really now produce high quality products for our high value add customers, which is the RB1 market. And we are also, the board 2 days ago approved 4.8 billion in terms of our new project that we're going to do, which is a brownfields expansion of our Goedgevlei project, which will then add another 2.7 million tons. And that has been done really with good work and partnership that we've had with TFR, whereby as part of a strategy to unlock that whole Waterberg corridor, they have also been partnering with us in terms of ensuring that they spend the capital that is required to unlock that whole corridor.
So you're going to have the road and rail infrastructure that you need, all that's on schedule?
Well, we prefer the rail.
Yeah,
that's
obviously,
right.
Carl.
That's
but
right.
You need access to places. Looking at Eskom, you've had issues with Eskom. You've had them closing plants that are near to some of your mines. What's the position with them?
Well, Eskom, remember, we've got 2 long-term contracts with them, supplying both the Matimba and the Medupi power stations. Long life contracts, 40 years, going into the future. So with those contracts, they are intact. Those are contracts which had been put in place before the Eskom's policy of 50% empowerment. And so we are very confident with those that we will be able to continue with those. We also have another long-term contract in the form of Matla, where again, there's a contract which has been there for the last 40 years or so. And that contract comes to the end around 2023. But our other strategy has been around ensuring that we create opportunities for ourselves to diversify beyond the power station sector by also looking at how we're going to actually export our coals into new markets. And hence why we bought the total coals assets to allow us to exactly do that, and also reduce our risk, both from just being concentrated domestically, but also taking advantage with the vast resources and the ability to blend and create various product mixes to tackle various markets, moving away from Europe and tackling the Asian markets, both India, Pakistan, and our new focus now is also tackling the north part of Africa. So that is our strategy, is to say, yes, we understand that it is important that the space that is also created within the domestic market to allow new emerging players to come. And given that strategy that Eskom had embarked upon, we saw that this creates an opportunity for us, being already an established player, to start looking for different markets.
Anything else from you, Grant?
Maybe if we can, maybe just touch on the iron ore outlook. We know you've obviously divested a lot of your assets there, but do you think that there's any disconnect between the spot prices that we've seen? I mean, we've seen the spot price of iron ore rally up quite significantly, and what you're seeing traders do on the ground in China?
Well, I always tend to be a fundamentals guy. You know, I like to understand, I like to see the stock levels, I like to see the consumption, because at the end of the day, you can't control prices, you can't control exchange rates. So my philosophy has always been that which we can have control over, let us actually do well on those. And hence why the whole drive around optimizing our business and making sure that we position our organization and our assets in terms of being at the lower end of the cost curve. Looking at our portfolio, optimizing our portfolio, and those assets which we believe are not in the class that we are looking to actually go with into the future, disposing of those. And that's what we have done in the past few years.
Final question. People talk about political uncertainty. A lot of people reporting numbers report political uncertainty. There's uncertainty in the mining sector. What's your view on this?
Well, I mean, there's always going to be uncertainty. So for me, I just take that as a given. And hence why, in as much as you have challenges in terms of the promulgation of the MPRDA and all of those events that are currently with us right now, I believe that we will find each other at some point. Our drive as an organization is that we've got good resources. We want to spend capital to develop these resources. We want to be able to create jobs. We want to impact positively into the communities that we operate in. And the only way we can do that is to invest and ensure that we can contribute our part to the growing of the economy.
That is Exxaro CEO Mxolisi Mgojo.